Okay, everybody, it's Richard Calhoun, Creekside Realty, here to do the market update on Silicon Valley real estate market conditions. Basically, quick recap. This is May 16th. We're going to be talking about Silicon Valley real estate market conditions. To get the handout, you go to tinyurl.com/RE market graphs and then add in the word handout and today's date 2020 05/16, and they will be posted shortly after the meeting. To get to this meeting for next week, you change the 16 to 23. This is the whole URL if you want it. This is the meeting number and the password. Anyway, there's several different types of market data that we're going to talk about. We're going to talk about the macro, which I think is the most important right at the moment because it gives you an idea where the real estate market as a whole is doing. Normally, I'm focused on the micro market data. We will get there, but I'm not sure how useful it is. The monthly data we did last week, I do have it at the end of the handout because it hasn't been changed. The most important data point, I believe, is days of unsold inventory. It's the ratio between supply and demand, which in a free economy determines where prices will be going in the future. Overbidding is key because that shows you what the buyers are feeling. Two measures. One is the frequency, how often are buyers overbidding, and the second one is the magnitude. Moving on to the next slide. This is the macro data that I said was so important, and this is, I think, where we will spend the bulk of our time. Total current inventory, that is what is on the market today available for consumers to buy. The blue line is the current data for 2020, and you can see basically after today, there is no data because there's no way for me to predict in the future. The gold line that goes on for the whole year is the 5-year median. So I went back and looked at what the number of inventory was for 5 years and then took the median of that. And then the red line is the percentage. So basically, even with shelter in place, you can see as far as the active available inventory, we are in a completely normal year. We're basically bouncing on each side of 100%. The purple line is where shelter in place was announced, and I'm doing the announcement date versus the effective date because I believe consumers reacted to it as soon as it was announced. And then the red horizontal line is just where 100 percentile is to give people an idea of where 100% is to have it stand out. Moving on to the next most important thing, this is the number of new listings in this past week. And again, this is macro data, and just for clarification, because this is not what I typically do, this would be Santa Clara County, San Mateo County, single family homes, condos, and townhouses combined into one data point. We're just trying to get a sense of what the market's doing. You can see the concept is the same. Gold line is the 5-year median. The blue line that's barely visible here you can see it, here you can see it is current data. The red line is the ratio compared to the 5-year median. Purple line is when shelter in place was announced. And you can see we were basically having a completely normal year, bouncing on both sides of 100% of the 5-year median. And then shelter in place is announced, and boom, we dropped down. And on a percentage basis, the number of new listings dropped down to about 50%. And then last week, we jumped up to 80%, and it almost looked like things were going to be back to close to a normal. But now this week, we're down to about 65%. So I think what you had was a lot of sellers that were sitting on the sidelines just racing to get going. And I have a feeling that 65% may even come down a little bit next week. I think there was some pent-up sellers. They jumped on the market. We were at 80%. We're now down at about 65%. I suspect we'll balance out somewhere around 60%, but there's just no way to know because we have not been through something like this. The next component is the number of new offers accepted. And obviously with new listings, the number of new offers went up. Again, the important thing is the ratios. Now, it's just coincidental that the blue line and the red line are on top of one another, and that's just because the scale happens to work out that way. But right now, you're sitting here somewhere around 60%, 65% of normal transactions of offers accepted. So even though we had 80% new sales last week, the buyers didn't go out and buy everything that was on the marketplace. This is actually pretty important because even if the consumer doesn't lose any value, in the prices, which really doesn't seem to be happening to any great extent. The industry as a whole is sitting here and operating only at somewhere around 60% of capacity after having taken 2 months off. So there's going to be a significant drop in GNP and productivity in the real estate industry. Now moving on to the next component, closings. This data point is continuing to go down, and this is simply at least mostly because of the lag in closings. The other thing, closings, some escrows happen pretty quickly in 3 weeks. Some may get dragged out and have issues and take 6 weeks. So it spreads when the market happens, but you can see shelter in place occurred. There was an initial drop in escrows, which shouldn't have happened, but some buyers may have been in escrow, may have gotten cold feet, may have walked away. Then as we weren't able to sell, the number of new closings came dropping down, and I'm on a percentage basis, so I should actually be on the blue line. There was a little jump up, but that's just statistical fluctuation, and then we've been kind of cruising down. Sometime pretty soon, we should be hitting the bottom as far as the number of closings, and the number of closings should reverse and start going up to reflect the number of new offers going up. There's going to be a lag. It's going to be probably about 5 weeks, but it will, and we are about 5 weeks, because if this has happened on week 10 and then we were shut down for about 4 weeks, and then you do a 5-week lag, you're at week 19. So if week 20, the number of closings actually reverses directions and goes up, that is what I would basically expect it to do. Moving on to people that gave up on the market. These are cancellations. These are sellers and listing agents that theoretically agreed to cancel their listing. They were on the marketplace. You can sit here and see the blue line, which is the raw data. It shot way up, but very short-lived spike. You can see the percentage on the red goes way off the graph. I didn't want to shrink the vertical graph down to do it. But basically, very rapidly, basically 3 weeks after shelter in place was announced, you're basically fluctuating on both sides of normal. And in fact, you could easily argue that the red, the percentage, is below the horizontal median, which would tend to say you're a lower number. But if we're only having 60% of the new listings coming on the market, then cancellations should also be lower. Long term, short term, there really isn't much difference. The number of inventory to cancel is essentially normal. So if we were having a normal rate of cancellations, this would be at 100%. And it's pretty darn close to 100%. I would almost say that some of these people that canceled here accelerated their cancellations, so we're a little bit on the low side. And if you go back to early in 2020 or 2020, you can see that we were slightly above normal. So here at the beginning part of the year, you can see the percentage was a little bit above the normal number of cancellations. This is the number of expireds. These are people that were on the market for the entire listing contract and then did not renew it. They may have renewed it a couple days later, and you still have a canceled MLS number out there. You can see we were basically at the normal number of cancellations, a lot of fluctuation at the early part of the year. We went up a little bit right shortly after shelter in place. But again, it appears the last 2 weeks we were essentially back to normal. Moving on to withdrawn, you'll notice that the red lines have disappeared, and that's because the way the nature of the beast is, a withdrawn listing is essentially temporarily off the market and the underlying listing agreement is still in effect. So when that listing contract comes up to its expiration date, it gets transferred to an expired listing versus a withdrawn listing. Consequently, there's no easy way to retroactively get the number of withdrawn listings. So I can't find out withdrawn listings accurately from even a month ago, let alone a year ago, because cancellation dates have reached. But the raw number, you can see that it was very low at the beginning part of the year. You had a short-lived spike in the blue line. Then you were basically bouncing around and it's going down. So that would tend to say that people that have given up. Now that we're able to show a little bit, the number of withdrawals should probably be quite a bit lower. You might notice that this new number right here for the last 2 weeks at just about 21 withdrawn is significantly higher than the beginning part of the year at some number around 10. You might say, wow, they're up. But remember, at the beginning part of the year, there's very few listings, so there isn't the listings to withdraw, and the people that were going to tend to withdraw would have withdrawn going into the holidays, not shortly after the holidays. So I think this function, in my opinion, is probably completely normal, but again, I have no ability to go back and get data from that. This data, I did not have an opportunity to update, so it's last week's data. It's one week's data. I will be bringing it back next week with current data. But the thing that I think is noticeable is this is basically pre-shelter in place. We were having a large amount of overbidding at 108%. We're now down to 100%. So basically it's telling me that the buyers are not feeling the pressure to dramatically overbid. And the frequency of overbidding is down quite a bit. Up here, you only had 16% of the transactions prior to shelter in place. 16% of the transactions went under, 77% went over. Now post, 22% are going over, 41% are going over. So buyers are still going over, but going over about half as frequently, and they're going over by a whole lot lower number, somewhere around 100 or 102%, depending on whether you look at median or average. Now we're moving on to sort of just a graphical overview of the Bay Area. This is based on overbidding. So remember, this is closed data, so there's that 5 to 7 week lag time. Red is a red hot marketplace. This is blue through here. That's going to be a cold marketplace. The gray color is a balanced marketplace. So again, this is February the 2nd. Moving up, here's February the 9th. Moving forward to this week, this is the 16th. You can see that we got a fair amount of red. But again, this is historical data. It's lagging by at least 4 weeks, if not 6 weeks or 7 weeks. Most of them are about 5 weeks. But with shelter in place, a fair number of escrows have gotten delayed a little bit. So now we'll shift gears and we'll look at days of unsold inventory. This is jumping way back in time. This is back to April 11th. And we're just going to step through to look at it. And you can see the large red area in both San Mateo and Santa Clara County. A little blue area here, cool. This is the expensive region of San Mateo County, which would be Menlo Park, Atherton, and Hillsborough, even though Hillsborough is up here and shown in the red because they share a zip code with the Bay cities. And the coast is gray along with Morgan Hill because you're in a balanced marketplace. Moving forward to the 18th, you can see the amount of red has dramatically reduced. The amount of gray has completely expanded and the blue has expanded. Moving forward to the 25th, the red is essentially gone except for Foster City, which is a very small micro market area. The blue hasn't expanded, but the gray has taken over the red. Moving forward to the 2nd, wow, the red has come back a little bit. And I believe this is then tie into when we were able to show vacant property. As soon as we could, we got back out there and the market heated up again. The coast heated up, and I think that's partly because we're a little bit in the summer. Now we get to last week, and there was a little bit of cooling off here, basically only in the low-priced areas of San Jose, which I consider to be the affordable areas, the most affordable areas. And now moving forward to the 16th, you can see you picked up a lot of red in San Mateo, in Santa Clara County on the east side, Morgan Hill, Santa Teresa, Blossom Valley, Milpitas, North Valley, and over in Cupertino, Mountain View, Sunnyvale. You also picked up Daly City area. Foster City's been red. And Foster City, you got to remember, is a very small micro market, so really doesn't mention much. The other thing that is very noteworthy is Palo Alto went from blue to gray. So, and that actually happened very recently, which is an encouraging sign. I was a little bit nervous because this area had been blue, and that's usually the leading indicator. So the fact that it came back to gray was quite pleasant surprise for me. And that gets out of the graphical data. Now, as I warned you, this data for days of unsold inventory, just for these two graphs, we won't spend much time on it, is a week old. You can see basically we were red hot marketplace, shelter in place happened. We came up here, we slid down. The predictors, these horizontal parts indicated DUI would probably come down this week, and you saw that graphically, which were accurate. With the increased red and the increased gray, which is associated with lower DUI. So The trend is downwards. I just don't have the exact numbers to plot for you. Won't spend any time on this. This is the micro market areas with last week's data. Now this is current data, and the rest of the data is current. So this is inventory. You can see inventory was coming up. We hit shelter in place, it dipped down, and we're back up. So, from just looking at the inventory, you'd almost think we were in a perfect market, just an absolute normal marketplace, but that doesn't tell the whole story. Here's all the different micro market areas. Basically, the trend's similar. We were increasing a little bit, a dip down after shelter in place, and then we've been increasing since then. Moving on to the number of offers accepted. Shelter in place. You were ramping up, and had shelter in place not happened and no other major disruptor, the number of offers would have continued to go up from here, and we'd be way off the top of the screen, and won't even let me get my pointer off the top of the screen. Instead, we had shelter in place. The number of offers came crashing down. We hit our low point right around the beginning of May, and now we've been going up. And again, here is the last data point and then this is based on 3 weeks data here, which is why I did it horizontal to make sure it jumps out, so you just don't think it's current data. And then it jumps down. And I need to understand this in my data. The only thing that would make sense is I didn't multiply this by 5, but if I didn't multiply it by 5, then we'd be at somewhere around 1,700, which would be so high off the scale, it's not believable. So I do believe this number for 3 weeks data, and I normalize that by dividing by 3 and then multiplying by 5. So I think we'll see an increased number of sales for Santa Clara County. San Mateo County and condo townhouses, the numbers are lower and the trend is the same. I don't understand this, which should be the same thing, but on 1 week of data. I had the same problem last week, and I need to spend more time digging through my processing formulas and finding out why it just doesn't make sense. It's moving on to all the different micro market areas. You can see the trend is exactly the same in every single micro market area. The magnitudes are just different. Number of closings. Shelter in place is announced here. We actually went up after shelter in place, and then we've been coasting down. It looks like based on the 3 week number, I'm way low. And then on the 1 week number, I'm off the top of the chart. And again, I think the 3 week number, I do have some confidence in. I have very little confidence in the 1 week number. All the different micro markets, the same thing. And on volume, when you're talking about number of inventory, number of sales, number of closings, the size of the micro market determines where the line is. So that's why the counties are all on top. But on the rest of the slides from this point forward, they're going to be all blended in together. So overbidding frequency. Here you have shelter in place, overbidding continued to go up, and you might say, wow, that's pretty strange. Well, the reason it continued to go up is you don't get the sale price until the escrow closes. So these are market activity that was delayed by about 5 weeks, at least 30 days, some longer, some shorter. And again, you can see the trend is downwards, and going forward, it's downwards. And that basically says buyers aren't feeling the pressure to overbid. And this is the frequency, so how often they're overbidding. And here's each one of the micro market areas. This is now shifting gears to magnitude of overbidding. How much does a buyer feel he or she has to overbid on any one particular transaction? And you can see again, the trend is going down. You can see my indicators for future going down. These both look reasonable, and because they're a ratio, there's no multiplying to get to the full value. There's each one of the micro market areas. No micro market area, in my opinion, is really jumping out, performing better or worse than any other micro market area. On to price. They're basically flat. And that's what that first graph shows. Sale price is basically flat. What's happened is sellers raised their list price after the first quarter and seeing the prices going up, and the buyers now are just not overbidding. So the sale prices are remaining flat, if that makes sense. So the overbidding amount has gone from 108% to 100% or 102%, depending on whether you want to look at average or median. but sellers elevated their list price, which now means the seller's still getting the same amount of money, but they're asking closer to what they're going for. I also think it's real important at this point to be very careful where you price a home, because buyers aren't going to overbid as much as they were prior to shelter in place. Here's the same data, the 10 percentile for all the micro market areas. And just for clarification, 10 percentile is the cheapest 10% homes in a given market area. And this allows you, when you combine it with the 90 percentile that's coming up, is indicate that 80% of the homes are between two different price ranges, and you can quickly get a price range for any given micro market area. Most people follow only the median price. That is on this graph, and again, you can see it's pretty flat. There is upward indications on my indicator on 3 week and 1 week, and again, that's the level plateaus here at the end. You know, the data fluctuates a little bit every single week, and then all of a sudden it's level, and that's because it's, and I misspoke, it's not weekly, it's daily data. I plotted these points for 3 days so that they would jump out and people would not get confused. Here's the median price for each micro market area. Now you might say, wow, this one's really jumping out, and I think this is going to be San Mateo County, and I think it's going to be the expensive areas. So even though the San Mateo expensive areas, which is Menlo Park, Atherton, and Hillsborough, is in a buyer's marketplace, the price is going up, and that's based on not necessarily what the value of any particular home is, but maybe more expensive homes in that area are coming onto the marketplace. And here's the 90 percentile market for the three global things, and the three globals again are Santa Clara County, San Mateo County, and condos and townhouses in both counties combined. This is the same data point for all the different micro market areas. Here's the duration of escrows. Not a particularly important data point, but you can see that when shelter in place was announced, there was a significant rapid increase in the duration of escrows. Basically, something would come up in an escrow and it would take longer to resolve it. But you know, going from 25 to 30 days isn't the end of the world. But I think that's what the real takeaway on this is. If you were scheduled to close in 4 weeks, you might have taken 5 weeks. You know, but again, most of the transactions were closing. Here's each one of the different micro market areas. Moving on to days on market. And again, this is still a pretty meaningless data point. The biggest thing that makes it meaningless is the MLS changed their rules to freeze days on market. So once we hit 0 right here, which in most areas we hit right after the 18th of April, somewhere between the 18th of April and the 25th of April, that would mean that 50% of the homes came on the market after shelter in place, so they had 0 days on the market. And you can see all three data points are 0 going forward. Fairly soon, they opened that up starting, I think, maybe even today on the 16th. The days on the market are going to start increasing, and we'll see how long it takes to get back up to some sort of reasonable number. This is all the different micro market areas, and you can see every micro market area except for the cool micro market area of the expensive area of San Mateo, in San Mateo, which is Hillsborough, Menlo Park, and Atherton, are at 0, and they're at a very low number. They're down here. If I was to guess, that looks like it might be 1. This looks like it might be 3. That looks like it might be 2. So the number is pretty low. Here is actually the raw data, and I do have DUI on here. So you can see Santa Clara County overall, we're sitting here at 52 days of inventory. In South County, they're at 66, 52 for East San Jose, 35 for Milpitas, Berryessa, Santa Teresa, Blossom Valley, 41 for the moderate Campbell, Santa Clara, Cambrian, 28 for Cupertino, Sunnyvale, which is a red hot marketplace, 88 for Saratoga, Los Gatos, and 79 for Los Altos, Palo Alto. A couple things noteworthy. My normal benchmarks are 40 to 80. That's the balanced range. So at 79, it's just into the balanced marketplace, and that's how little of a change it took. You know, it was probably somewhere around 85 last week, so the increase isn't that dramatic, but it was enough to change it from blue to gray on the graph. So you have to look at the data. Also, you have the magnitude of overbidding here and the frequency of overbidding in this column. And then it's all the different areas. And then since we're all talking about COVID-19, you know, right now the doubling rate is greater than every 40 days. So we're definitely flattening the curve. And current hospitalizations for all of Santa Clara County are only 91. And that gets us through the data, and I'll open it up to questions. Does anyone have any questions out there for me?
Well, thank you. This was a really amazing presentation, jam-packed, full of good information like always. Is there a way to get a copy of the presentation?
There is. I have set up a YouTube channel, and the easiest way to get there, as I'm a fan of tiny URL, so tiny URL, RE, market graphs, and drop off the date, and that will take you to my YouTube channel. It takes me a couple hours to get it posted. The previous ones are up there.
Okay, let me just take a picture of that site real quick and then.
So just for a recap, I use TinyURL because it's easy for me to remember. Then the name of this group is the real estate, so I use RE, market graphs, plural. Then to get to the meeting, put in the date. So next week's meeting should be at 2020-05-23, and you'll get to the live presentation. To get to the archives, you just drop off the date, and maybe that's how I should say it. You know, you might have used the TinyURL to get to this meeting, and if you did, then just drop off the date code, and that takes you to the YouTube channel. If you want the handouts that will be posted later today, you add in the word handout after graphs before the date. And that way, you know, people can remember it.
Thank you.
You're welcome, Gustavo. Thanks for joining me. Also, just, you may not know, Gustavo, at the end of this data, starting on the next slide, is my monthly data. So you'll have that there in the handout as well. And it's the whole enchiladas. And I'm going to leave that there even though there's no change.
Oh, okay. Can you hear me?
Yep.
Oh, okay, good. Well, thank you, Richard.
You're welcome. See you next week. Take care, everybody.
Yeah.